All right, welcome back. Listen, before we get started today, I want to say this, okay? And I want to show you a little clip, a small little clip before we get started talking about today's stock. I'm aware that a lot of us are dialed in to social media, Instagram, Facebook, even TikTok. And when we're dialed in, when we're so dialed into social media extremes, what happens is we start looking at other people's lives. And when you start looking at other people's lives, it looks as if everybody else is doing better than you are. It starts looking as if everybody else is living the lifestyle that you would like to live. They're taking the fancy trips to Aruba, Jamaica, all of the tropical islands. They're living in these fancy luxury homes that cost, $500,000, or at the very least $300,000 to $400,000. Four or five bedrooms, three bathrooms. They're driving these nice cars. They got the they got the Cadillac trucks, or the G wagons or whatever. But it's so easy, you all. It's so easy to be fooled by what you are seeing in social media and on Instagram, because that is just it does not give you the microscopic view that you actually would need to actually determine whether or not these people are really financially well off, or if they're just pretending to be that because of how it looks on social media. Now, I want to show you what people are out here doing, okay? In order to appear to be living the life of luxury, people are willing to throw themselves into financial manslaughter, okay? They're willing to commit financial manslaughter on their own funds, all in the name of vanity, all in the name of trying to impress people that don't even give a shit about you. What am I talking about? Well, I want to show you this clip and show you just how crazy people have taken this idea of owning new, of having to have the latest and the greatest. What happens when you get caught up in that is nothing good. Let's watch.
Yeah. I work in luxury sales, and these are the highest payments we've ever seen. It's our sales manager, Shaq. What's the highest payment you've ever seen?
Shit, probably 4,800 to 84 months.
What's the highest payment you ever seen?
4,100.
Seen?
37.
What's the highest payment you ever seen?
3,250.
Jeez. Alejandro, what's the highest payment you ever seen?
4,300 on the lease.
Jeez. What's the highest payment you ever seen?
About $3,200 on a V Series Escalade.
Ooh. All right. What's the highest payment you ever seen?
The highest payment that I've ever seen is $4,400. This young lady, she purchased a 2024 Cadillac Escalade V.
Ooh. Sean, what's the highest payment you ever seen?
2,700.
Ooh. What's the highest payment you ever seen?
40 bands down, 3,800.
Ooh. What's the highest payment you've ever seen?
2,800.
Wow. Yeah. I work in luxury sales, and these are the highest payments we've ever seen. It's our sales manager.
Okay. A couple of these. Now, I know the numbers just kept getting more egregious, and more egregious. And it was hard to keep up with all of the different numbers that they were throwing out there, but all of them were ridiculous, right? I think we can all attest and agree to that. But one of the things that they said was that somebody put $40,000 down and they still had to pay $3,800 a month. Listen, oh my God. The stupidity of people, okay, will never cease to amaze me. You put $40,000, even in this economy, where used vehicles are costing you double to triple what they cost you about 20 years ago. Even now, $40,000 is more than enough to get you a vehicle that will get you from point A to point B without any problems that you don't have to worry about, at least for a couple of years. But to put $40,000 down cash and then still end up paying nearly $4,000 a month is insanity. Okay? It's insanity. And I want you all to understand, These people that are taking these deals, $3,800. I heard a price in there, $3,600 for a lease vehicle, meaning that by the time you are done paying month to month $3,600, $3,700, you don't even own it. You got to get it back to the dealership. Listen, on social media, stupidity can become hereditary, okay? I need you all to be safe out here. I need you all to be careful, and I need you to be very mindful of what it is that you're doing. That $40,000 that they took and put down on this vehicle, let's just take half of that. Let's take $20,000 and say that they took $20,000, invested it in what we're about to talk about right now, which is Aries Capital, ticker symbol ARCC. I guarantee you, if they had taken that $20,000, $40,000, if they had taken that money and invested it into Aries Capital Corporation at a dividend percentage of 8.31%, I guarantee you that they would have been much better off. They would have set themselves and put themselves in position to be financially stable, to be financially set, and to be financially fiscally responsible. However, they did not do that. Now, let me show you why you might want to invest 40,000 into a stock in a company like Aries Capital versus going to throw it away on a vehicle that is a depreciating asset and starts losing value as soon as you drive it off of the lot. Okay? Now, I'm not telling you to take 40,000 and throw it into Aries Capital. But I am saying that I would much rather do that versus putting it down on a vehicle that I still have to pay a monthly note on. All right, let's get to it, y'all. Aries Capital, here it is. I got it pulled up. Sitting right now at a stock price of $23.10 as of the time of the recording of this video. Aries Capital is a BDC. What is a BDC? A BDC is a business development company, and although we've gone over this many times before in my past videos, I will do it once again here because I understand that we have new people in the audience every other day, right? So, what is a BDC? A BDC is a closed-end fund that makes investments in developing and financially distressed companies. What does that mean? Well, BDCs typically invest in other businesses, and other companies come to companies like Aries Capital in order to get funding or to get some type of financial backing in order to support or help prop up their business. Okay, so in I guess in short, it is one of very, very many lending companies out there that is able to provide other companies with some financial responsibility with the financial obligation to pay them back in kind, usually with premium interest attached to it. Okay, so ARC, I got it pulled up here on stockanalysis.com. It says Aries Capital Corporation is a business development company specializing in acquisition, recapitalization, mezzanine debt, restructurings, rescue financing, that's what we were just talking about, and leverage buyout transactions of middle market companies. So they invest in debt, you all. They buy debt in order to bail some of these companies out, and in return, they get paid back not only that what they dished out, right? So they get not only that money back that they gave to these other companies, but they take it back at a premium. And sometimes, depending on the business and depending on the structure of the contracts, some of these companies actually get paid back with equity within other companies, okay? But they're telling you right here what they are investing in and the type of businesses that they are lending to and how they're getting their money, okay? It also says that they prefer to make investments in companies engaged in the basic and growth manufacturing, business services, consumer products, healthcare products and services, and information technology service sectors. So they really have, what that really says is They really have their hand and their arm in a little bit of everything. They're making sure that within their company, with what it is that they do, that they're diversified across multiple different industries. So they're making sure that they're getting money from over here. They're getting money from the tech industry. They're getting money from consumer goods. They're getting money from the health industry. They're making sure that they are not lacking on their diversification with their business, which is really, really, really a strong. This is one of the reasons that I love Aries Capital. And if we go up to their performance, let's pull up the charts. Max chart all time, they are up um, 50 over 52%, almost 53%. And again, Aries Capital Corporation is a company that has been around for a while. So they have that longevity, okay? If you want to go back and we look at their IPO date, it's back in 2004. They IPO back in 2004. This is a company that's been around for well over 20 years, y'all. Okay? So we have some skin in the game, right? We have a chart history to where we can look at and be able to see the shortcomings, the downfalls, the pitfalls, and how they have performed. Being up 50% all time is incredible, especially if you look at these dips here. You see this dip in 2009. That was right after the housing market crash of 2008, which affected everybody on a mass scale. And then you will see another dip here in 2020. And we all know that 2020 was the pandemic, right? So these major events, it really takes a major event to offset this particular stock. But if you look at the chart, everywhere else, they have been at the very least stable. And that is what we love. But even on the 5-year chart, they're up 23%. Let's go to the year chart, up 14.7%. Year to date chart, they're up 5.4%. Let me tell you why that's incredible. Because if you go and if you took a handful of 5 other BDCs and you look at their performance year to date, a lot of BDCs have been suffering as a result of the economy and what's been going on in our industries, right? But Aries Capital, despite what has been happening financially in our economy, has still been able to not only weather the storm, but they still been able to pull out some price stock appreciation. The forecasts, again, this is full of analysts that are just like you and I. They make mistakes just like you and I. So you would take their analyst consensus with a grain of salt. However, they are saying that right now, Aries Capital stock is a buy with a high estimate of $23.06, a low estimate of a high estimate of $24.50, and a low estimate of $22. Okay, so right now they're saying that this is probably where they're at now is around the average price of what they would expect this stock to be worth. All right. Now, if we go over to the dividends, the dividend yield is 8.31%. That is I consider anything to be over 7.5 to 8%. I consider that to be a high yield dividend. Okay. This pays out quarterly. And right now you're getting about 48 cents per share. Okay. 48 cents per share on a $23 stock. I love it. If you drop down to the dividend chart, you can see that beautiful chart. Let me go back up. You can see that beautiful chart there. And this is what we like to see. You saw it dip off back in 2015. And since then, they have been gradually climbing. Gradually climbing. You'll see that they are getting, and they've been pretty stable since, 2023, 2022. You saw an uptick, but they have been pretty stable for the last, I would say, at least 4 to 5 years. Listen, I feel very comfortable owning this stock. And again, for $23 per share, I think that this stock is still underrated. and it's performed well. It's done well for me. And going forward, I look to pick up a bunch of shares of this one. I definitely think that I want to get this one to 100 shares next. Those who have been watching me, you know that I recently got to 100 shares of Realty Income, and I think Aries Capital is a great stock to push that envelope and push it to 100 shares. But listen, you all let me know what you think down in the comments about Aries Capital. If you own it, drop a comment. If you don't, if you're interested, drop a comment. Either way, I'll see you all in the next video. Later, y'all.